Good morning, everyone, and welcome to the morning homework session and trade plan setup for Friday, March the 14th, 2014. It is Friday of the March break. I'm hoping everybody's going to have a wonderful vacation. For those that are just starting their March break, of course, up here in Canada, we're just finishing our March break. We're Quantum Leap. This is a self-organized learning environment. We have a private chat room that has been in existence for over 4 years. It's not a commercial venture, it's just a private venture of some like-minded traders that like to get together and talk about the markets and learn together. If you're interested in finding more about that, you can send me an email at d.mckay@stealthtrader.com. Got lots to talk about this morning, so let's get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures trading instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Okay, so let's talk about yesterday. I'm going to just do things a little bit different today because I thought yesterday was an interesting development, and it's a good example of why we, have multiple hypotheses and we look at our extended targets, because you always have to be on the lookout for when we get into these trend days. And of course yesterday we had a wonderful trend day. Now my main hypothesis, as we talked about in homework yesterday, was basically rotation within this 1852 area and the 1872 area. And I said if we broke into yesterday's range and got below this 1862.50, that we're likely to rotate down to the 1857 naked V epoch and down into this 55 area, with the possibility of coming down at the 52. Now I didn't think that we would get much lower than that. I thought we'd bounce off here and we'd trade inside of these inside of the prior day value area and just chop around there. But I did say that if we did break below 52.25, that we were likely to move all the way down to this 42 area. But I said, and you can go and check this out because I did say this, I said I didn't think that if we came down here that we would stop there, and that we would most likely come down and come down into this area in around 34.50, and of course that was our extended target for the day down there at 1834.50, and we hit that to the tick. Buyer stepped in, rotated us up, and closed just at that 1839.50. So you can have a main hypothesis, but you always have to know what's going to happen and what's likely going to happen after that main hypothesis is violated. And because of the fact that we had a plan in place, that the break below the 53 was no big deal because we had our targets below. We had the 47 target, and then we had the 41.75, which was the microcomposite VPOC here, and then we had our extended target all the way down here. And here we are in this lower distribution. So I just want to just leave that in your mind, and why we have the multiple hypotheses and why we have a plan for even when our main hypothesis is violated, and be able to react to those situations. So let's get going. We're going to do our regular homework. There's some interesting things that I want to talk about, but we can't skip our normal routine. So if you're watching this on YouTube after the fact, we do go through a macro to the micro to get prepared for the marketplace and understand where we are within the markets and the macro to the micro. We start with the key numbers. Of course, key number is that 1837.75. Now, even though that is in the March contract, okay, it is our year open, and we still pay attention to it. Of course, we've got our all-time high at 1887.50 with it adjusted now down on the June contract at 1880.50. And then we have our adjusted RTH high at 1877.75. Month low is still down there at 1732. Of course, we're coming down there to test that. This is going to be, I'm sorry, 1832.25. This is going to be a key level today, and I think it's going to get tested today, because we are trading just, we had bad PPI. It was the biggest drop in the PPI numbers since May, I believe. Nothing else really jumps out on the macro numbers, so we got to move over. Let's take a look at our numbers from yesterday. We opened in the Globex at 1868.75. We had Globex high at 1867.50, and we, that can't be right. Can't have a Globex open and a lower high. We'll have to take a look at that. Howard, if you can just check that out for me, please. Globex low at 1860, and then we opened up at 1866.50. We had an open auction outer range. We had opened just above that prior day range, and we were talking about, violating that 62 level and coming down and getting back inside of yesterday's, range and value and rotating down to the VPOC. We did end up with a trend day. Opening swing was 3.5 points, 67.75 to the high, 64.25 to the low. And then initial balance 67.75 and 61.25 on the low for a 6.5. So pretty normal day in the beginning. It looked like it was going to set up for a rotational day. Then the sellers stepped in and they just took us down. You can see that we're starting to trend down now. We've had 5 days of lower volume points of control, so you can see we are creating this trend down. Lower close at 39.50, lower low, lower high, and lower 1230 number. So we are seeing some weakness coming into this marketplace. Had a fairly large RTH range. That was the biggest RTH range that we've had since, I think, January the 24th, and same thing with the full session. It was a pretty large range for the full session. And then, our 20 days are now expanding again slightly, just over 15 on the RTH, just under 18 on the full session, and just under 10 on the Globex. Value area is a key thing as well. I want, both our volume point of control and our value areas are trending down now. So we had a value area high 51.75 and a value area low at 1834.75, and we broke the IB to the low side inside of that pocket at 939. Volume was definitely heavy as the sellers poured it on and pushed this market down. I think they used rollover. We had a 7-point differential in the rollovers numbers. I think they took that to their advantage and rotated us back down into this distribution zone that we're going to talk about today. Going to the daily report, I just got to pull up what is our overnight high so far. Let me get rid of that chart there. It's 32.25. Remember, 32.25 was our month low. We have now tested it. So that, anytime you see those numbers between the two contracts and, they get close, they're going to go out and equalize them out. So right now our 20-day ATR targets to the upside, 1850.25. 20-day ATR target to the low side is 1826.04. Pay attention to this 1826.04 because it's just above that 1825.50, I believe, which is the adjusted number from that 1832.25, which was that larger microcomposite that we fell out of, that we traded between December 23rd and January 23rd, I believe. So just take a look at the news. We've got University of Michigan sentiment report coming up at 8:55. This is a scheduled and subscription-based report, so be careful between the open and that first 25 minutes, because some people get this report early, and we could run into some fluctuation in the market off of this number. So let's take a quick look at the macro to the micro, make sure we see where we are in the trend, because I want everybody to understand, even though we're seeing this weakness coming in, and we are, we did have a pretty big rotation, it does not violate the trend overall on the big picture. On the monthly, we've got slope and separation. We are maintaining this the secondary trend line, which is basically pretty much a parabolic move up. But until we get down below 1759, we're really not in violation of the trend. We're just getting a little bit of a retrace and trying to pick up buyers down here in this prior distribution zone. Going over to the weekly, same thing. We're coming down. We've tested the 9 EMA, and we're holding the 9 EMA. A break below that 32 is likely to bring us down to test the 20 SMA down in that 1812, 1813. And the number I was looking below is at that 1814 level. Possible head and shoulders could be setting up here, but still very early in the pattern. Going to the daily. Daily is a different picture. It's showing the weakness that's coming in. We've got we gapped down. We broke below the 9 and the 20, and we're certainly starting to violate this this trend that we had, and we've lost slope and separation. Don't forget, we do have that naked cross down here at the 1794 area. So you just want to keep an eye on that. Going over to the geometric chart, because this is one of the things that I wanted to point out, is that, and this is running on the continuous contract, and I understand that. This was the energy point that we were looking at, and we have come and hit the energy point on the day that it was scheduled to hit. And we had talked about the fact that if we got inside the lower distribution of this upward sloping fork, the intermediate fork that I added, that energy point was likely to come into play, and we've come down and then it hit it. So, the reason why we watch the different methodologies and different structures of the marketplace, even though we trade personally off of volume profile, is they do give us clues on where those possible rotations, and this was a clue that had confluence between both the market geometry and the volume profile. So you can see how and why I watch the different things. Even though I don't make trading decisions off of the geometrics and some of the other methods we watch, we do watch them as probable targets and possibilities of where we're at. So right now, we're in danger of violating this major upward trend of the long-term fork that we've been watching. We've been watching this fork for many months now, and we are coming down again to test the lower line of it, and then we're getting an opportunity to break inside of this intermediate fork that I added a couple weeks ago, and now we're below this intermediate upward sloping fork, and we've got to look for this possibility of coming in and coming down to this energy point down here, which is scheduled to hit somewhere in around March 21st, so sometime next week. So just keep an eye on. But if we could hold above the upper line of the intermediate fork and the lower line of the longer-term fork, I'd be looking for a retest to come up here and test the upper line of the intermediate upward sloping fork and the 20 SMA and the 9 EMA as it comes into a MA hug right now. So let's just take a quick look at the intraday trends, see where we are in the trends. Now, the 4-hour hasn't been giving us much information lately because we were consolidating. That picture has completely changed now. We're now in this downward trend on the 4-hour, but we do have a technical gap that we have created. That technical gap is going to be closed somewhere in that 1447, 1448 area. So look for that possibility to come up and close that gap on the 4-hour. But we are seeing weakness. We are seeing a start of the trend on the 4-hour. Going over to the 30-minute. 30-minute, we had a pretty strong trend down all yesterday, good slope and separation. We had created a couple tech gaps, closed that tech gap here. Then we gapped down with the rollover, and we've basically been going sideways, but we've broken down below, created a bit of a foo-bar and a little bit of a tech gap, and we're coming up to close that tech gap, and that's going to close somewhere in around 1839. And one more time, go down to the 5-minute. You could see we were getting good slope and separation, good trend in the last hour or so. We had this tech gap that was created down here, pulled back, closed the gap, closed above the 9, and now we've closed the gap on the 20, and we're now above the 20 SMA and holding above this key level, coming up to that 39 level, which will close the tech gap on the longer term intraday. So let's take a look at what that looks like on the big picture. So let me just open this right up because I want to make sure that yesterday we talked about if we get down into this area that we'd likely come down and chop around in this distribution where we've got these three main CHVNs, one at the 3450, which is also the microcomposite that ran from February 14th through to the March 3rd with the microcomposite VPOC at 34. But we've got two other major distribution points of undetermined fair value here in around 2950 and 2550. Remember that ATR 20-day ATR target is down here just above this at the 26. But more importantly, we've got this longer term microcomposite VPOC, which was on the March contract 32.25. It's now 25.25 with the adjustment to the June contract. So that's a key prominent number. My main hypothesis is if we hold below this 38, 39, we're likely to rotate back down, on any weakness in the University of Michigan numbers and, rotate down here in between this 1821.25, the other side of balance around that 25.25, and the upward side of balance up here at that 1839. Right now we're holding in this area right here, which was the microcomposite that we accepted value just before the breakout with the VPOC here at 41.75, the value area at 43, with the larger value area of the microcomposite up here at 43.50. So I think that's probably likely going to be our our upper range for the day. We could look for a retracement back to the 50% fib level of the significant breakout day, but I think it all depends on what the University of Michigan numbers are. If they come in slightly weak, then I would say we'd come down and chop around in this area as we mature the auction down here. But right now you've got to watch this 43.50 area as a key breakout level. If we get above that, then I'd be looking for the rotation back up into 47.75 and the 50% mark, which I think is where is it? It is at 51.25. So 51.25 is just below this key CLVN that we were, that was our line in the sand below us yesterday, now becomes a line in the sand above us. If we stay below that, then I think we still continue to see weakness and probably rotating and sticking in around and rotating around this 41.75. But if we could hold below 43.50, then and the U of M numbers come in weak, then I think we break back below this 38.75, come down, retest this 34.50 area, and if we get below 33, we end up chopping around with a main target below us down here at the 25.25 with the other side of balance, and where I'd want to see us hold. That is also just above the value area high. Remember that 18.1850? If you've been around, 18.1850 was a key level for us in the March contract. It's now a key level for us for the value area low of the longer microcomposite that we were in between December 23rd and January 23rd. So let's go over and take a look at excuse me, our overnight numbers and move our levels over to our intraday chart. So currently we have a overnight high here at 44. And we have our overnight low at 18.32.25. See how the market has memory? They came down to that 32.25, and that was the big number we bounced off of the last time we came down to pick up buyers in the March contract. Now it was back in play overnight. Why did that not draw? All right, and our current VPOC, which I don't think is going to shift, is at 18.42.25. Oh, these buttons just don't want to work for me today, or any other day lately. 42.25. Okay, so let's get rid of this and see how this sets up. So currently we're trading just above that 39, I'm sorry, just below that 39 level, just below the VPOC from yesterday and the naked close that we have at 1839.50. We're going to be opening up in this lower distribution. They basically stole the VPOC from us, at the end of the day, as we found buyers stepping in and holding us up. So we're going to open up in this lower distribution. Our value area low is basically our range low, and right at that key 34.75, 34.50 level. So that's going to be a big level for us to hold right now. And then you've got the overnight low down at 32.25. So what I would be doing is I'd be using the value area low and the range low at 34.50 as a key area to trade off of. If we hold inside of this level, I'd be looking for a rotation. I think we're going to see the rotation to take out the naked VPOC and naked close right on the open if we hold in this area. And then you've got to look to see if they take us down. If they take us down on weak numbers or before the UFM numbers come out, then I think people have some early indication, and they're going to take us lower in this distribution area, and we come down and break below the overnight low, take out the overnight low at 32. You can see that will take us below the minor CLVN at 33, and I think we get a rotation down to the first distribution point here, and the most prominent within the longer time frame composite. So that would be my main target below at 29.50. With the other side of the balance being that 18.27 and just above the value area high at 26. And this is a tricky area because now we're at the 20-day ATR target and just above that key level at 25.50. So I really don't think that this 26 is going to hold. So what I'm going to do is I'm just going to move it down to 25.50, and I'm putting it as a trade area. It is a target, but because it's such a big number, I'm expecting a bounce off of it as buyers will step in there, as the buyers and sellers like to do business at that area. So it is a target, but it is a trade area as well, because if it comes down here and I see buyers stepping in, I'll get long into back up into this this 34, well 29 and 34 level. But if we can't hold above 25, then I'd look for a continued bit of weakness coming down to the other side of balance down here at this 21 1/4 area. And then below the 21 1/4, we've got that two big numbers below us is the 18.1850 and that 18.14 area. That'll be target 1 and target 2 below. And 18.14. And then the other side of balance down there is going to be, let me just fix this because I don't think, 18.0650. I was having a hard time seeing that. 18.0650. And I don't think we're going to see a much bigger move. We had a pretty big move yesterday, so we're likely not to have as big a move today. Of course, the market can do what it wants, but I'm anticipating that we're going to get stuck in here in this distribution zone here as we mature the auction here. To the upside, if we hold 34 1/4, look for the rotation back up towards the 39 and the 41, 42 area, this microcomposite with the key level being here at this 43. But considering if they don't take out the overnight low first, we've still got a 96% probability of taking out this 44. So I'm going to use 42 as my target with a secondary target at 44, and then the level that I would trade off of here is going to be the range low from Wednesday, and basically where the VWAP was in the RTH session. So that would be not a target, sorry, it is a trade area. And then of course that will put us above the 43 key area between 43.50, 42.75, and I'd be looking for the break above that and up to test this 52 1/4. And remember, the 50% retracement of the significant breakout candle is at right at 51.25, and you've also got it as 51.75 as your value area high as well. So this is a key level right here, and it's going to be my main target above if we can hold above that 39. And it is a target, but it's a trade area as well, because if we get above 52.25, then they're going to try to go and hit this 58 area and get back inside of the range of this microcomposite and get back into possibly coming up and testing the value area high up here at 61, 60. What was the value area high? Sorry. It was 61 1/4. So 61 1/4 is the value area high and the range high from the prior day. So this is going to be my extended target to the upside. Let me just change that. Just bring this to the front so we can see it. All right, so those are my levels. I mean, if we do break above that, you've got 67.75 as a trade area, as they'll try to hold us inside the value. But I'm not. I mean, that's not very low on my hypothesis list. Basically, the key is, do we stay above or below this 39? And if we break below this 34, then I think we're just going to come down and get some rotation day in here. There's a few wicks in here that we could get stuck in, but really this area between 21.25 and 38.75 is undetermined value. The auction's got to be matured in this area, and I think we bounce around. But if we can hold above this, then I'd be looking for them to push to 43, and above that 47 with the key area is this 52 area. And I think we'd see some responsive sellers stepping in there to hold us down and get us back into this distribution zone that we're in between the 14th and the 3rd. So that's what I'm looking at on the composite. Let's just take a look at how that looks like on the Keltner and the Renko. So center line of the Keltner is right around 37. Right where we're trading right now. So coming into the open, we're trying to hold above. We're getting a little bit of a downward slope on the Keltner channel, but if we can hold above this, the test up to the upper Keltner line is going to take us up to that 43, which is that key level that I was discussing, and probably take out the overnight high. If we get below it, then the push down will take us down into that 31, take out the overnight low, and test our first target below at that key CHVN at 29.50. Let's take a quick look at gold. Gold, I mean, this, how many times I've said this over the last month, that when we get these descending, broadening wedges, how powerful they are. I keep waiting for, to see if this cup and handle sets up, and this thing's just strong. And I readjusted my right rim of the cup because I'm still waiting to see if we get that retracement to set up the handle for the bigger move up to 1576 area. But when you get these bottoming patterns and they break out, they can just take off, and so far this is just taking off. So let's go take a look at what that looks like on the composite for gold. We talked about this yesterday, that that the major target, our major target, how long have we been saying the target above 52 was this 87, and we've come up there today, and we've now hit that 87. I just thought we'd see some balance coming in, but I'm going to take this profile right off because right now we're in a trend in gold. So what I'd be looking for in gold is, and I'm going to have to probably go back a ways to see where our next balance area above us is, because there's really nothing until we get all the way up here into this 1468 area, and that like I said, once you get the breakout of those descending wedges, they can be so powerful. So we're currently trading at 1387 area, which was our main target above for the last, waiting for the breakout above that 52. We got the breakout, and where do we go? And this is a good example of why we watch where the balance was and where the VPOC was in those balance areas. Because when the market goes into price discovery, okay, it's an advertising mechanism, and it's advertising on the way up. It's advertising for the sellers. Where are they likely to have to advertise to find those sellers? Where the buyers and sellers did a lot of business. And you can see, that key level was up here at 87, and we're just hit it to the tick today. So right now you want to watch this 83 level. If we get back below, this is a pretty blunt area in the composite, so there's a lot of undetermined value in this distribution zone now that we're back up above the 52. So I would likely see a lot of chop in between here. So if you're trading gold today, I'd be trading off of this 82.40, and if you get below it, your two main targets is 78 and 66, with the other side of balance being down here at that 52. But if we could hold this 81, I think we're going to chop around in this level, and the first target above I would have is this 1393 area with the CLVN and a key centennial number. We're coming up into that centennial number. They're likely to get some some magnetism and a push to test that 1400 from below. So if we could hold above this level, I think that we make a push to test the 1400 level today. So that's everything that I've got that I'm watching. It is 10 minutes to the open, so this is going to conclude our morning homework session. Be careful on the open. And we have that University of Michigan numbers. If we break below that, I'd sell and make sure that you get scaled before you get down to 32, but keep one running because we're likely to go down and hit that first target at 29.50. And once we're down in this level, it's anybody's game how much weakness is going to come into this marketplace. But I am anticipating chop in this area between 21.25 and 39 area. As always, trade well, trade safe, and we'll catch you on the flip side.